Welcome back to the Block Fuel Podcast. Today we are joined by Laurence Latimer, who is the founder and CEO of Dinara. So Laurence, very excited. We've been talking with you for a few weeks now and finally get a chance to bring you on the Block Fuel Podcast. You guys are building something really incredible. And so would love to have you just give us a quick background on yourself and then ultimately weave it into how you guys started Dinara, if you could.
Yeah, no, happy to, and happy to be here today. And I really do appreciate it, Avi. Let me tell you a little bit about myself. So I'm the co-founder and CEO of Dinara. And just the one-liner is we provide enterprise banking services for companies that transact with digital assets. And my background, I've built a career that's been on providing access to novel financial services. So I've got more than 20 years building financial infrastructure. 15 of that has been in enterprise fintech. 10 years of that has been in heavily regulated financial services. I ran a business, served enterprise customers, trading customers primarily throughout the Americas when I worked for a company called SunGard, since been bought by FIS, helped launch their execution services business, including launching their alternative trading system. Was responsible there for their blockchain strategy and execution since about 2016 and originated and helped to lead their overall partnerships with on the clearing and settlement side. This is blockchain-based clearing and settlements and the exchanges and tokenization strategies. It was all part of the mandate as the head of ventures. And while I was there, we actually launched 4 new businesses, one of which was built to do clearing and settlement for precious metals. That was called Tradewin Markets. And so really most of my career has been dedicated to make it easier for businesses, enterprises to innovate and deliver value to their own customers and principally in financial services. As I mentioned, while I was at IEX, I really got into crypto. So that first project that I mentioned was actually one that was based on loyalty. This was a loyalty program that leveraged blockchain. This was back in late 2015. And it got me going down the rabbit hole on blockchain and Bitcoin and digital assets more broadly and the potential that it represented. So eventually about a third of my time was spent on digital assets, everything from clearing and settlement to tokenization of real world assets. And it was just very clear to me that blockchain, digital assets were going to really revolutionize the way in which we interacted with data, and not just in financial services, broadly across society. And it represented to me a generational type of opportunity. And it reminded me of when I was very young, the dawn of the internet and email and how the internet became a part of the fabric of our lives. And then mobile technologies, you think about the kind of early days of that. And when you had the iPhone that got introduced in 2007, it really was this watershed moment, but you have this decade of development that led up to that. So that's a little bit about how I got into it. And about 2 years ago, actually at this point, middle of 2021, it's a little 2.5 years ago now, my co-founder, Keith Dinara, and I reconnected. I'd met Keith when he was at another company. He was leading their engineering group and focused on a company that built infrastructure for trading of digital assets. This is again back in 2015, 16, 17. And we knew each other then. Didn't dive in super deep there, but as we got reconnected, we really started to dive in deep. And he at the time was a EIR, executive resident at Silicon Valley Bank, was there for about 2.5 years, focused on their digital asset strategy. And had been incubating this idea that eventually became Dinara. And as he and I talked more and more about it, it was clear that we shared a vision for the future, a passion for digital assets, and really started to get aligned and in sync on what the problem space was and the opportunity that we could help bring to market. And so that's how Dinara was born. And so we incorporated the business in December of 2001. We officially spun out and been fully independent ever since. And then we closed on our initial round of financing in February of 20 and then launched right at the end in December of 22. So about a month after IEX filed for bankruptcy when we launched. It was either the best timing in the world or some of the worst timing in the world. But we launched and went through our alpha for a good chunk of 2023, bringing on customers very carefully in a closed alpha, and just came out of that and still a closed beta, but widening the prism a little bit. So that's a little bit about me and a little bit about our journey to get here today.
Laurence, we love that background, especially coming traditional finance side. And a lot of the Block Fuel listeners specifically are looking to see what's it going to take to bring people over from working in infrastructure, working in New York on or off Wall Street, And really bringing these mature systems, like we talked with Hallborn on, is just like having maturity of like checks and balances and security, and having a lot of just the different layers of operational complexity, but also necessity around that. So when you get excited about crypto, when you first look at it, what led you to the creation of the idea that was like, hey, Dinara is the product that we need. Like, we need a new enterprise banking services. What was like maybe that main pain point that was like, look, this is totally missing. Some of the custody is just MetaMask wallet, or it's just a Coinbase trading app. We need to bring in more of a seasoned, like experienced approach to doing this.
Yeah. There was a few things. So back in 2021, the team conducted about 400 C-level interviews with founders, and actually some founders in crypto, and also some crypto VCs. And the types of problems that they had were really consistent as well as persistent over time. And so that included everything from having way too many counterparties. So having to deal with 4, 5, 6, sometimes even 7 different counterparties to execute a single transaction. You had the cost can sometimes be high, particularly if you were a smaller company. Sometimes you get the worst pricing out in the marketplace. You had a real infosec risk. We heard not too in far too often. Yeah, companies that were using a password manager between their FinOps teams to figure out who could get access to a particular system at one time, because you only had one email per entity to get access to, say, a particular vendor or counterparty. You had real administrative overhead, so just the management overhead of orchestrating and keeping track of all the different threads to this infrastructure that you were stitching together by hook or by crook. And then the user experience was really poor. And so folks were just looking for something that was as simple and as elegant as they experience on their fiat banking. And they couldn't really get that on the digital asset side. Not to mention, for those who weren't like total degens, they wanted something that abstracted away from the complexity of digital assets. And so there's a range of things that led us to this, what became the idea for Dinara. But ultimately, it was about delivering a customer experience that was an institutional customer experience that's commensurate with the types of experiences that these folks were getting in other parts of their world, and especially with their fiat banking services. And so there's a range of things you wanted to do there. One was just simplify, deliver all the way from onboarding to their day-to-day workflows, making sure that was super easy for them, never more than a couple of clicks away from any transaction that you want to do. Make sure they had access to the data they needed, giving them types of administrative tools. And as you mentioned, some of the like core type stuff, right? So making sure that they had a custodial model that fit for them. So both abstracted away from the complexity of dealing with, whether it's seed phrases and gas fees and sort of others, but giving them the types of security that they really wanted. So they didn't necessarily want to manage all their seed phrases, but they wanted to make sure that they had the same type of institutional security. What we delivered for them is just that, right? So an institutional partner support the digital assets. So starting with custody, a place to hold those assets. We use MPC on our disaster recovery side. We have a multi-sig type process for quorums on transaction approvals. We can support any chain and any token built on any chain, obviously subject to any sanctions or OFAC lists that are out there. But we provide support for new or under-supported tokens, and that's been a real benefit for us. We have fully segregated accounts. I think one of the things that we certainly learned is that there are a lot of benefits to having segregated accounts that are yours, right? Their funds aren't commingled. We don't rehypothecate funds. You can verify your holdings, right? You want to verify your holdings in the wallets that you have with Dinara. You can do that with the relevant block explorer. So what we wanted to do is bring the best of both fiat and crypto, and where the customer is always in control of their assets, but they also have the same types of simplicity and kind of high levels of customer experience that they're used to.
It's been cool too. I've been in the space since 2017 and just seeing the maturity every single year. Obviously the spot ETFs being approved, and just watching more institutions come in into the market and having those demands, right? A lot of custodians that are out there do not have segregated accounts. And so for those that maybe not super familiar with custody, could you just dive in a little bit further on that? Because I think that's a huge point which you guys provide compared to others that commingle those accounts where it does have a lot more risk, I'd say, for the customers.
Yeah. So to say it again, if someone is commingling your assets, look, let me be the first to say there are a lot of different models out there, and different models have different or optimized for different use cases. In our experience, what our customers are telling us is that they want their assets fully segregated. They want to be able to control those assets at any given time. They want to be able to verify their assets themselves. And they want to be able to move those assets 24 hours a day. They want to have to worry about, they want one, wallet address that they can use. And they don't have to re-up that every time they need to do a new transaction. So for us, we're really responding to what we've heard from those 400 plus discovery conversations that we've had over time. There are use cases for custodial models that commingle those assets. Our customers aren't those. And what we're seeing in the marketplace is that segregated accounts seem to be really the way that folks want to go. They want their wallets, right? But they don't necessarily want the complexity that comes with managing that at a really granular level. And so we provide that institutional setting with fully segregated accounts. Those wallets and those wallet addresses are entirely our customers. And they don't have to worry about us commingling their funds and what's happening with their funds when they are paying attention to them.
Yeah, we've seen that. And I'm talking before this, just you guys really started growing post like FTX collapse. And that's something that like a lot of listeners can grasp of the situation at hand and like what can go wrong when you have commingled custody. And I think another point you mentioned on is being able to have users validate the actual reserves. If part of the FTX debacle was also that FTX was selling paper Bitcoin. So selling Bitcoin and having it show in the user's account, but it wasn't actually being sold. In the same way, so the Bitcoin community is very mad about that because it obviously affected price action, affected supply. Solana community is upset about how like FTX affected their long-term like price action and the value of their tokens. Could you talk a little bit about, did you guys start building natively that proof of reserves type model before FTX? Or was this something that was like, hey, people are going to want this. They're going to want proof of reserves. They're going to want to see, hey, those assets are sitting within those accounts.
Yeah, that was really important to us as a design principle. So from the very beginning, it was important to us to have those kinds of segregated accounts where our customers could go in, verify those accounts themselves. Just to, again, as a design principle, we thought it was like, this is the way that it works on the fiat side. In the long run, we certainly have a vision where there's this merging of traditional finance and you call it crypto finance. And at the end state in that vision, you're going to want a similar set of tools and similar sets of functionality. Again, if you're a business, there are always going to be folks that operate in pockets on edge cases. But for mainstream businesses, for that 80%, 90% use case, you're going to want the types of tools and the types of services that you're used to as a finance leader dealing with your fiat bank. And so you're going to want someplace where you can go in and those are my assets. They're fully verifiable in my account. You're not going to want a model that forces you to rethink how you engage with your own treasury. So it was an important design principle early on for us, particularly on the institutional side. And yeah, so the markets moved in the direction that we thought was important and already going. I think we're only going to continue to move more and more in that direction.
What would you say? Just, it's always interesting. We hear institutions coming in and you hear some of the bigger names, right? The Larry Fink and even with JP Morgan, Jamie Dimon coming in. I don't know if you're working at that scale, but some of the companies that you're working with, what are some of the conversations without going into too much detail, but has the spot ETFs, has that changed the mindset significantly, or were some of these conversations in anticipation of that already getting started? And what types of companies are ideal Dinara clients?
Yeah. So let me talk about the second half of that question first and then move to the first half of that. So in terms of the types of customers that we have, our customer so the user for our product is going to be your finance leader in the organization. And so for the types of customers, though, we deal with technology companies. These can be anything from Web3 native startups. We have some Web3 gaming companies, a nice pocket of those, and they've got some in-game play to earn type token. It has some off-game benefit. We've got a nice little pocket of tokenized real world asset companies. And so again, part of their business model, launching these tokens, pushing them out to their customers, and there's oftentimes transactions around there. We even have some Web 2 companies that are moving into Web 3, which we're really excited about. So these might be, say, a web dev shop or some other types of professional services firms that's taking in, say, stables or the tokens that their customers are launching. And so the through line for all of them is that dealing with and managing digital asset treasury is an important part, a really critical part of their business model. For most of them, I'd say they're on the smaller side, right? 50 employees or less. We certainly aspire to go upscale from there. But if you look at the core of the Web3 universe right now, particularly in the United States, they tend to be smaller type companies. And again, we're dealing with the finance leader. So at the smallest type companies, oftentimes it's the founders. Then you get a little bit bigger. Maybe you outsource it to some outsourced fractional type of CFO or accounting type service. And as you get a little bit bigger, maybe you bring that back in. You've got a controller, or maybe you bring accounting back in or something like that. And so we want to make sure that we're building a product for those guys. Second type of customer that we have are VC firms or others that are investing in the space. So we've got like an early L1, layer one protocol that oftentimes they're looking and acting similar to investment firms. And it's a similar case. In this case, almost by definition, they're launching a new token that doesn't otherwise have support. So the fact that we can support new L1s and the tokens built on top of them is really valuable to those types of customers. So that's a little bit of the ideal customer profile. Primarily, it's those small, medium-sized businesses, Web3 native, also Web2 moving into Web3. And then secondarily, those VC firms. But as we talk about the general tenor, the mood of the industry, you mentioned the Bitcoin ETF approvals back in early January. That the run up to that and the approvals themselves have certainly been, I'd say, a tailwind for the industry overall, not just on our customer base, more broadly for the types of headlines that we see, and not just in digital asset media, crypto media, but mainstream media. The kind of positive or negative nature of those headlines certainly trended more positive than we've seen in a very long time after a tough 22 and tough early 3/4 of 23. And I think what it's also done is helped us, it will help, and you're starting to see it, but get the marginal user, the marginal person, the marginal business owner to say, oh, wow, okay, if these big guys, whether it's Fidelity or BlackRock or even JP Morgan, despite what the CEO is saying, their Onyx Group has been doing really tremendous work, innovative work in the blockchain space. If these larger companies are getting in and diving in feet first, you've got billions of dollars. I think now it's the second largest as a whole, as a Bitcoin ETFs, now the second largest commodity ETFs out there behind only gold. When you've got that kind of momentum, you've seen that kind of acceptance from larger companies, it helps make it easier for those small and medium-sized businesses, the guys that are a little bit lower in size, but still really important to the overall economy. It makes it easier for them to start launching new products, start to offer new services to their customers that are digital asset based, that are crypto based. So we think that's really where we're going to see the most momentum. And it's a second order function, but an important one nonetheless.
I guess with that, like you mentioned earlier, just around in 2022, coming a DeFi summer, and a lot of like the existing things on the market are built for really DeFi degens that can come in and willing to take certain risks because they're also looking at high rewards. What are some things that when you're looking at this market that you just mentioned of some of the smaller, but more like enterprise institutional type players, hedge funds, traders, different VC firms, what are some of the user experience things that you're looking at just to try to simplify that, protect them from fat fingering mistakes or being able to have like easy off ramps? Like what are some of the things you're thinking about?
Yeah. So let me first say that the kind of user experience in general is really important to us. I mentioned it a little bit earlier, but we've invested significant amount of time and energy to provide a superior customer experience. And that's not just technology, it's also with the people function. And so for everything from the way in which we've engineered our onboarding all the way through to how you get your data to plug into your tax and accounting systems, we've really spent a lot of time to make that as easy and as simple as possible. And one of the things that I like to start with is our onboarding. When people hear onboarding, eyes roll, it's just, oh my God, that's just so horrible. And that's one of the things we said, this is the first experience you're going to have with the platform. So let's make sure that's a really good one. And I've spent a really significant amount of time investing in just something as simple as our onboarding process. So it's not measured in weeks, sometimes months. It's not a series of email back and forth. We've made it so simple that it's entirely user done. Our user delivered. And most of our users are typically done in about 30 minutes with what they have to submit. Documents are ready. And we'll typically turn around a response in about 48 hours. 2 businesses is normally what it is. Again, going from weeks, sometimes even months for onboarding down to something where you at least get a decision in a couple of days. And what you have to do is roughly about 30 minutes. This is one of the ways in which we've really engineered for that customer experience. Other ways that we've done it is, and anywhere on the platform, we've made it super simple to navigate, but we never want you to be more than a couple of clicks away from a workflow that you need, whether it's sending value off of the platform, obviously a wallet-to-wallet transaction, or even a fiat off-ramp, whether it's creating new wallets or in a new account structure, whether it's adding new users that maybe you've got like an outsourced FinOps team that you only want to have view-only access and be able to set that person or that entity up really quickly. Again, making sure that when you really start saying, what are the things that a typical finance leader, your controller, your CFO, your head of finance is going to do on a day in and day out, let's make sure that those are never more than a couple of clicks away. Abstracting away from some of the complexity that's in our world, whether it's gas fees or dealing with seed phrases, making sure that our customers don't have to worry about those things if they don't want to. Mm-hmm. And then we're even right now just thinking about how you authenticate into the platform. We have a passwordless authentication system that leverages biometrics. And so really trying to minimize the vectors of attack on the platform, but also make it as easy as possible for the user to be able to get onto the platform in the safest environment. So there are all kinds of ways in which we're delivering on that overall customer experience. And again, and use cases so that our customers' lives are just easier. And what we hear from our customers, I wish I could tell you all the quotes, but more than 50% of our customers are referenceable. And the types of quotes we get from them written, feedback, product is spectacular. It's easier than any of my online bank accounts. It's exactly the solution I needed a year ago and want right now. So that's the kind of stuff that brings a big smile to my face and lets us know that we're on the right path.
Yeah. I think simplifying, and just as we've gone through with many different clients and customers and just the space in general, like the simpler something is, and the premise of this podcast is to demystify all the complexities of crypto. And so it allows your company and crypto in general to be more ubiquitous, right? It allows people to come in that see something, and even myself, sometimes I go to Jody for like DeFi, like how do I do this? And things are so complicated. So bringing that down to the simplest form for companies not to have to learn something crazy new, and just being able to work in an environment that's simple is key. You guys are a US based company. So are you guys working international as well, or is it mostly US, or how have you seen like the advantages of being a US company and maybe some of the disadvantages with some of the regulation? I know you can't talk too deep into that, but if there's been any disadvantages too, early on at least.
Yeah, we are a US company ourselves, and we focus on US customers and really customers in the places we can serve. We are exploring international expansion. We think that that's important. We get that a lot from our customers. Hey, I've got a business in Europe, or I've got customers in these other jurisdictions. Can you serve them as well? So that's something that's important to us, and continuing to expand our geographic footprint here in the US as well as potentially internationally. And so that is one of it was an important guiding principle early on to figure out the US market. Now, we all know that there are certainly challenges here that you don't necessarily see in other markets. That we don't necessarily have the types of like regulatory legislation, the crypto legislation that we've seen in some other jurisdictions, whether it's parts of Southeast Asia and Singapore and others, or even in Europe with its MiCA regulation that is coming into play. But the reality is that the biggest markets are here in the US. Everybody wants to be here in the US. And when that kind of watershed moment happens here in the US, it's going to be dramatic. It's going to be fast. This remains the largest market in the world. And it was important that we figure out a way to serve this market today and frankly be part of the vanguard that helps bring the next 1 million companies, 10 million companies into Web3. Mm-hmm. And just like there are a lot of options for fiat banking, there's going to be a lot of options for your digital asset banking needs. But for that mainstream adoption, the benefits of digital assets have to outweigh any friction or cost to using them. And so what we've done is just built a platform that provides that really seamless, frictionless integrated platform where any business can hold or transact. Any US business can hold or transact with digital assets just as easily, safely, and quickly as they can with fiat. So we thought that was really important to launch here before moving out into some other jurisdictions, because if you can figure it out here, you definitely can be successful in other places.
I was going to say, it's like the Frank Sinatra of crypto. If you make it here, you can make it anywhere, right? in the
That's exactly
globe.
right.
I think and it probably gives a lot of confidence, I think, to a lot of the institutions. I know you're headquartered in the New York area.
I'm in New York, but our headquarters are actually in California.
Right. I meant you. Sorry.
Yeah.
You personally are stationed, I guess, here in New York. But no, so it's really fascinating. I think I admire any company that is doing things right from the get-go, not trying to go too fast. I think a lot of companies fall into that where they try to expand super quickly. So a company like Dinara is smart to slow things down a little bit, make sure you're right in the correct jurisdictions and everything is moving pretty quickly here.
I can give a response if you want a little telltale, but it's like the landscape is evolving. It's evolving. The regulatory landscapes are evolving globally. Frankly, it's evolving here in the US. It's a very different environment today than it was 2 years ago. And look, the reality is, like any innovation, we're going to go through periods where not just the regulatory environment, but our legislative environment has to catch up to the business use cases and to this innovation. And I think what we can do to help accelerate that evolution and getting to a better steady state, and we can do that by really collaborating for the industry and our elected officials to collaborate. New and incumbent businesses have an important knowledge on the industry, and that can really help our legislators and the regulations that come from the bills that they pass.
Mm-hmm.
And so we're reg forward, right? We didn't come out trying to get around regulation. We came out saying we're going to build our infrastructure to try to be regulatory compliant from the ground up. And that's been harder in some cases and easier in other cases, but we thought it was an important part of, again, our design principles and what the industry wants to see on a go-forward basis. Would be even better right now, again, to accelerate that evolution, is to see our federal legislators step in to pass some bills that provide more clarity and help inform the dynamic and sometimes confusing regulatory landscape that exists in the U.S. between the state and the federal regulations, and even between some of the regulators, whether it's CFTC, the SEC, the CFPB, and others, which can sometimes have conflicting views on regulatory landscape in the U.S.
What are some of the things that looking forward in the future, like you're excited about, that are some of the use cases? I think people say the word institutional adoption, and that doesn't mean they're all just going to buy Bitcoin and hold it. I think there's actual like things that you're approaching where it's like, do you want fast payments? Or are you seeing more businesses that are like, hey, I don't want to wait for T+2 settlement, so I want to go to DeFi and get immediate settlement, instant settlement? What are some of the things that you're excited about leveraging stables, leveraging digital assets to enable like businesses just to be more efficient, transact faster?
I think the few things that we're excited about. So one is we actually don't take a position on which particular use case. Our vision is that digital assets are just going to become a core part of how we move data around, and a core part of our overall economic system, and frankly, our financial ecosystem. And so, the use cases we're somewhat agnostic to. What we do think is important is that there are an incredible amount of benefits to be had by leveraging blockchain and digital assets for a number of use cases. You mentioned some payments is the classic, right? Cross-border payments. I've worked in cross-border payments in the early part of my career. And one of the early startup jobs I had was working on cross-border mobile payments, actually. This was the pre-iPhone days. That is still can be a really slow, inefficient, expensive process. And digital assets are like the perfect use case for that. You're already seeing how that's helping to move value around into the hands of those that need it the most very quickly and with relatively low cost. I mentioned a couple others earlier on. You think about gaming companies. Having some sort of in-game play-to-earn token, having that token have some value both in the game and in other arenas, whether it's other gaming platforms or just off platform altogether. We're seeing another one that we're getting a lot of, I think, it is this sort of tokenized real-world assets. We've seen this a few times. It seems like it has a lot more energy and attention and enthusiasm right now than it's had in a long time. That you brought up another one, which is just clearing and settlement. If your assets are on chain, you don't have to have any counterparty risk. And so what does clearing look like when you're doing atomistic transactions? Or think about loyalty programs. There's another one that we're seeing a lot of attention to. But if as a customer of another entity of a larger company, I've got some kind of wallet or some kind of token from that company, it's a much closer interaction, a much closer engagement you can have between that company and its user, whether it's equity ownership. So thinking about, why do I have stock certificates when I can have a token that represents that? Maybe my dividend, instead of paid in dollars, gets paid in a stable, or if it's Starbucks, it gets paid in a gift card to the store or something like that. So there's a bunch of ways in which these different use cases can really matter and can drive value across the ecosystem, make things easier for companies. And so we don't really have an opinion about what the right one is or more exciting. We're just happy to see many of them becoming much more adopted, and you're really starting to get to this kind of watershed moment where you're going to see mass adoption across the ecosystem. Because look, at the end of the day, if you're selling something, you want to be able to sell it as broadly and as widely as possible, and as cheaply as possible, as efficiently as possible. And if you're buying something, you want to be able to buy it with whatever kind of value makes the most sense to you, whether that's USD, Euro, USDC, or PayPal USD, right? And so there's real like synergies with some of these just payments models, but these use cases, the types of value they can bring into the ecosystem.
2 questions: any partnerships that you guys are working on? And then in terms of roadmap for where this is accessible to businesses today.
Yeah. So let's talk about, I'll do the second one first and then talk about partnerships. In terms of accessibility, we are live and have customers in a handful of states, live in California, Texas, New Jersey, Massachusetts, Colorado. And we are going after money transmitter licenses in several other states that require us to have them. And our goal is certainly to be available in all the states that have meaningful digital asset businesses in 2024. We have some work to do there, both work that we have to do, and then engaging and collaborating with those state regulators that evaluate and ultimately grant or not grant those licenses. I also mentioned that we want to be international at some point. But depending on how a few things go this year, that may be possible in 2024. If not, certainly shortly thereafter, after we get a bit more traction here in the US. But we do prioritize different states and how much attention we're putting into getting regulatory approval from different states based on where we're seeing customer demand. So I do, for anybody out there listening, if you are in a state that we don't currently support, let us know, because it helps us to prioritize where we go after next.
Yeah. And check out your website. So it's February 5th, 2024 today. I know how MTLs, it could be tomorrow, it could be months from now. I guess on your website, I'd imagine it keeps you up to date in terms of which states and locales that you guys could work in.
Yeah, it does. And you can always sign up for our newsletter. We send out about a monthly newsletter, not too often, but it gives you a sense of what updates we've got, whether it's new products, new geographies, or other interesting tidbits. And then the second part of that question, we talked about types of partnerships that we have out there. We think partnerships are really important. Our whole industry right now, if we want to see mainstream adoption, our whole industry really has to come together to provide the kinds of institutional tools that next business that's sitting on the fence right now, thinking about whether they want to offer some new digital asset product or service. We've got to make it really easy for them. And so I think there's a place for an important place for collaboration across the institutional infrastructure ecosystem. So we launched our Dinara Connect program as a way of trying to catalyze that for our customers and for our customers' benefit. And the purpose of this initiative, the Dinara Connect, make it really easy and simple for founders or other finance leaders to not only find the support they need when they need it, but to help start to vet these potential partners quickly. So then our customers and our potential customers can focus their time on growing their business. And so we launched with a select number of a few leading financial services and developer solutions to help ease the burden, again, of building in crypto. And we limited it to really make the program actionable for our customers. So our launch partners included Bitwave, which provides tax and accounting, Chainalysis for our transaction monitoring, Fenwick, which is the law firm, great startup and digital asset expertise there, Propeller Industries, which provides fractional accounting and CFO services, QuickNode, which does developer tools, TaxBit, which again does tax and accounting for digital assets, and then Vouch, which is really one of the few companies that provides Web3 insurance. And so for us, it's again, so critically important to support businesses operating in the crypto ecosystem. And by connecting our own customers with these types of top tier partners, we're not only helping our customers and potential customers grow and scale their businesses, but hopefully we're opening up some new customer acquisition channels for our partners. And then again, overall, just strengthening the crypto ecosystem, particularly the infrastructure ecosystem.
Yeah. So it's a Trader Joe's model. Don't give you 10 peanut butters, give you 2, and you can trust that they're good because we vetted it. And I know we're coming up on time, Laurence. What's the best way to follow you? You mentioned the monthly newsletter. Where are you most active when you're speaking on either Dinara or the industry?
Yeah. Twitter is definitely out there. We're not super active. We try to get something out there a few times a month. Again, we tend to speak when we have something to say. We're not just out there trying to talk for the sake of talking. We do a lot on LinkedIn, and we're probably there, again, I'd say 3 or 4 times a month. So roughly about once a week or so. And between those two, those are really the main places. I'd also just recommend that for anybody who's interested, get on our mailing list. You can go right to our website, just sign up. Again, we push out content maybe once a week or so, once every other week. So not too high traffic, so it won't spam your inbox. We can keep you aware of new developments as they come along.
Very cool. Thank you so much for popping on the podcast. Always a pleasure to connect with you, and looking forward to watching you guys continue to grow. And I think this is a really good example of what you guys are building, doing it the right way, making sure that everything's slowed down and proper. And just think you guys are going to scale. You guys have a very bright future ahead of you. Just talking with you. Thanks.
Well, thank you. Really do appreciate it. It's always great I can talk about this all day, right? It's always great to come out and to talk to folks that are really knowledgeable about the industry, and frankly, just to share what we're doing. We think what we're doing is really important. It's important for our current customers. It's important for our mainstreaming digital assets. Just excited to be out here building in the space right now. Great talking to you guys today.